Welcome to this TMS tutorial video. In this video, we will be going through the budgeting for purchase costs section of the home purchase strategy session section. So once you've added your client, you'll be able to create a strategy session for the home purchase. If you are dealing with a client that is purchasing, we'd recommend if you have a meeting with a client, do this in advance so it's ready to go when you are meeting with the client. So you can click the button here to create a new one. If you want, you can put the client's initials. So using the example, this is the client, James Bond here. Put the client initials here and just say purchase. Townhome purchase 2025. So we're budgeting a bit in advance in British Columbia. And here is where you can select if they're a first-time buyer or a repeat buyer as well. So when you click save, this will create a new strategy session. So you'll be able to have older versions that you may have used with them in the past, and you can create other ones so you can do comparisons for clients as well. But keeping to the budgeting for purchase costs. So we've created the strategy session, now we have that in here. So we'll have this label, we can label this as well, we can edit this here. So JB 2025 townhome purchase. For the purchase price, we're looking up to 650,000. So you put that in there, and then based on whether you've put the client as a first-time buyer or not, the property transfer tax will filter in here as well. Now you'll see we have the existing home section ticked here. Now if the client's purchasing a new home, you can tick the new home section here, and the GST amount will automatically be calculated, and the purchase price will change to the purchase price plus GST as well. So that's a feature if they are purchasing a new home. For now, let's assume they are purchasing an existing home. Now, you can see the property transfer tax here is because they're a new buyer. Let's say we've got that incorrect and we want to edit that. So we click edit, you can change them to a repeat buyer, and you'll see the property transfer tax updates here because they aren't eligible for the first time buyer exemption for the 8,000 there. Now, the next section here, so we've gone through purchase price and the property transfer tax amount. The next section here is the down payment. So here is where you will see the minimum down payment required. So this isn't 5% because the purchase price is 650. It calculates 5% of the first 500 and then 10% of the amount between 500 and a million. So this minimum amount is the minimum required. Then there's 10%, 15% and 20%. So let's say in this scenario, the client is purchasing with 10% down payment. You can see the insurance premium will automatically generate here and be added to the mortgage amount for you. If you change this to 5%, you'll see the insurance premium at 4% is calculated, 15% is calculated here as well. And then if you click 20%, there is no insurance premium. So it works that out depending on the level of down payment that a client has. So this can be useful just to show a client if they're in between two different brackets. Let's say they had, 90,000, you can show them the difference between, okay, if we put 65 and if we're able to get an extra 7.5, this is the difference it could make as well. Now, if a client there's a couple of options if a client has more down payment than this. So you can choose here to click use a down payment amount for a custom down payment. So here, what you can do is you can either, if you're using the down payment amount, you can tick this. So you tick the box here. Let's say the client has 200,000. And then it will automatically calculate everything up here. If you untick this box, then you'll be able to put a percentage in for down payment here as well. So let's say the client wanted to put 35% down. Then it'll work out what that is, and then everything will update here as well. Now this bottom section here is if there is an insurance premium. So if a client already has an insured mortgage, so you'll see here if an existing homeowner has an insured mortgage, the insurance can be ported to another property and potentially decrease the amount of insurance paid. So this is where you would put in, if the client has an existing insurance premium, you put that in this section. But for custom down payment, this is the line you use. Either put a percentage here, or if you want to put an actual dollar amount, click the use down payment amount, and then you'll be able to put that in as applicable as well. So let's assume that they are putting 200,000 down. Now the next section here is sliding scale down payment as well. So this is relevant for, this is a tool if you have a client buying a property for a certain amount or in a certain location where sliding scale is required. So for example, where lenders say we'll go up to 80% on the first million and they need 50% of the amount between a million and 1.5. So you'll be able to use this, this tool here. And there's more information here as well for sliding scale. But to keep things simple in this example, here is we put in the manual down payment of 200,000. This is their purchase price, and the down payment is what we've discussed. So you'd go through this with the client. Now the next step here is appraisal cost. Now, depending on where the client's purchasing, as they are purchasing a townhome, they have a significant down payment. I mean, they may need an appraisal, they may not. More likely than not, they may not need one, but you can discuss. Let's budget for an appraisal just in case an appraisal is required. So you can budget for an appraisal. Any legal costs, put that in there as well. Property tax adjustment. So this is where you can explain what the property tax is. So again, this is a BC example, and this will generate for each province. There are different fields in here as well. But for property tax adjustment, this is your portion, or the buyer's portion, of the year's property taxes. So if the seller has already paid, it's worth budgeting some amount here if these are factored into closing costs. So let's just budget for, let's just say $600 here. Let's say they were purchasing a couple of months afterwards, or they had 2 or 3 months worth to pay. And then insurance. So you can always budget an amount as well for insurance if they are to pay this up front here as well. Let's leave that for now. And then home inspection, if they want to have a home inspection, you can put an amount here as well. And then other costs. So let's say the client wants to budget for moving costs, $1,500. You can also budget for, this is where you can add as well. Let's say they have a debt they want to pay out. Car loan payout, so they can qualify. You can put that in there as well, of 20,000. So they can see the budget that they'll need in order to do everything is 236, even though the down payment is 200. So the key purpose of this section is not only to cover down payments, but it's also just to put together a really thorough budget for the client. So when they get to their solicitor, what they will see will be as close to this number as possible. They are on track in regards to knowing exactly where they stand. One other thing you can do, let's say a client has already paid a deposit. Let's say it was let's say it's a new purchase, and they've paid some deposit as well. So all the numbers here will change, but we'll keep the other down payment and everything like that the same. So you can add here deposits paid and put a minus number. Let's say they put 100,000 worth of deposits paid, and then it will subtract that. So you can see the net amount here that they'll need at closing is 136,050. So that is how to use the budgeting for purchase costs section.